Impressive price action coming out of our favorite ticker today. In fact, today's volume reached a massive 1.6 million, and I have something for you that will get you to start thinking about the potentials for the coming week. So here we go. It's about to get real. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill him, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in straight to ticker symbol FNGR. And I do have a whole brand new chart over here for you because there has been studying. The ARCa Bulls analysts and I have gotten together and looked at a couple things. Sebastian Lim has something for me to share with the community here. So please, please, please pay some close attention here. But I do have some random little notes here to show you. Okay, so we're going to start off with this first. Okay, so right away when we hover over this candle here, you'll notice that the volume right over here gets displayed. Right, take a look at that. So yeah, we're looking at 1.638 million shares exchanged today. That is incredible. Now that actually sparked a bit of curiosity for me, at least, right? What I did here was I started looking back through the volume profiles day after day, right? All the way back. So I noticed that the last time we reached volume like this was back here. I'm talking about a similar number. That's 1.612 million shares traded on Friday, July 7th. Okay. So what I started gathering some more, confluence here, and this, just please know that what I'm talking about here is absolutely theoretical, and it's actually not mathematical whatsoever. I'm not using historical volatility backtests like I usually do. This is in fact an observation, and I want you to take it as such. Okay, so yeah, we're observing here 1.612 million before this run here, right? That it eventually took the price action to that 716 top side, right? So another thing that I wanted to point out was that we had this incredible uplift, and then we had this pullback, right, to create this supposed bull flag, right? So I want you to notice that this did happen here too. So we had this huge run, right, from 396 all the way up to 560. We got that pullback to create this bull flag up here. And now what's curious is this. So I started counting the candles. So I got one green candle, 2, 3, 4, 5, and 6 to the 1.612 million volume, right? So now this one here, 1, 2, 3, 4, 5, and what do you know? 6. And it just so happens that this candle is landing at that one spot, 638 million in volume. Okay, so what happened after this here was, in fact, it was, let's see if I have it right here. Yeah. So at the open, I guess, you know what? Let's just do it like this. Let me, no, I'm sorry. I have to do it from the opening of the next candle because unfortunately I know the opening of the next candle. So that led to a move that was 48 spot 17%. So since we don't know the opening of the next candle, we can only, you know, we're limited to the current price, right? The daily close being at 659 because the after hours came out to 655 or 2 or something like that, just a little bit under, right? So let's go ahead and apply that 48 spot 17% move to the upside from the current price daily close. And that leads you to a very curious target, in fact, right? So that leads you to $9.72. But if I remove this real quick and look at the range high, take a look at that. $9.80 was the top side of this range here, right? So, which is awesome. I mean, I'm just saying, right? I'm just saying that there's a lot of rhyming happening within this, and a lot of rhyming that I can't help but to just use so I can inspire you and show you different ways of observing price and putting a thesis together, right? Based on theoretics and based on also tangible things and more like mathematics and whatever else, right? Just for you to use your imagination. But I found it to be an incredible amount of confluence within what we just observed here. Okay, so that's yeah, so that's pretty much right what I what I wanted to mention here. So now let's go ahead and find out what the I guess what the problem could be, right? And I'm speaking about problem as in are we going to get allowed another opportunity to get long this asset? And I think Sebastian Lim may have found that. And I'm going to go ahead and just paste here his chart that he actually shared in the Discord, right? And this is it right here. So he said that what I'm afraid of here is actually a bit of a regression, right? So the regression that he is particularly speaking about is this one up here, right? So that has a, I mean, we are technically on, let's see, I mean, arguably there could be two there, but this is essentially one or two, right? This is a critical thing, by the way. It's very critical because we're talking about test 1, 2, and 3. Usually a regression test of 3 kind of requires a pullback, the largest pullback, right? But since we do have that 1 there, this could technically be 1, 2 here. Then we have 3 and 4. Now, why would it be important? Well, because test number 4 and test number 5 are true breakout tests, unlike test number 3. Test number 3 presents a huge capitulation. So if I'm thinking if I'm actually just observing here what he's talking about, then I think that this would be the true breakout test. We're going to face a pullback, and then we eventually will reach to the top side. This can be achieved in the immediate short-term time frame, seeing how much volume there is, seeing how much FOMO is being applied right now. The bulls are absolutely in control. So why don't we do this? Let's go ahead and close off Sebastian Lim's chart here, and let's put it to practice, right? Let's go ahead and just show it off here in my chart. So let me get rid of his screen, right? And now let's put it down here. So he was on the weekly chart, right? So let's go ahead and mark off the weekly. Okay, so let's see. So just so that we can have it. Oh, okay. You know what? I can show you this. Check this out. I'm going to introduce something to you. This is part, the introduction that you saw at the beginning, displaying the ARQ indicators, the algorithms that we just released. Let me show you one. I'm going to show you one that we actually just have to make life a little bit easier, right? So please notice that he has this. This regression here, right? So that's his manual drawing. So let's go ahead and pull up. If you're a holder of the ARQ indicators and algos, then this should be a pretty nice little surprise here for you. So let's go ahead and pull the visibility up on trend line, and this is ARQ trend line. And go ahead and notice that the algorithm itself displays pretty much, I mean, with some deviation, of course, pretty much what his drawings are showing. It's very curious too that it would even display similar colors too, right? So this would be your red and this would be your green. He has this is red and this. I'm sorry, he has the red top and this is the blue, aka your green, right? So very, very curious here that it would kind of in essence display a very similar situation to what he's presenting, right? So this is a good indicator to give you and indicate not only strength, right, using MACD built into this, and but also your pivot points. So this is your pivot point for high. It'll mark it off for you, and this marked off the pivot point from this candle, not from this one here. So it was about a week early, right? So it's a curious indicator, as it does have a momentum strategy. As you can see, it turns red right at the very bottom. It completely oversold. It starts to turn orange into yellow as we start moving into the 50% of dispersion, and then it continues on to green, 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 and green upon this ascent, right? So it's essentially a momentum indicator that tells you when pivots are in, and also shows you the potential trend that we're currently trading. If you do have this indicator, here are my settings. I did change just a little bit, so go ahead and take this screenshot right over here from the inputs, right? So I put the left bars at a 55 look back, the right bars at a 21, right? So the factor of 21 here. Now, I did change the MAC color fast, MAC color medium, and MAC color slow as well. So instead of the 5.921, I did a 5.21.55 factor. Okay, so I didn't change anything here, so you're good to go. It was just within the inputs section. If you are interested in acquiring these algorithms, please go ahead and get in touch with us at arqindicators@gmail.com, and we'll get you situated. So let's just go ahead and take a look one more time at the regression that he has, because you can clearly see that he is displaying the resistance slightly lower than what the algorithm is showing us here, right? So let's just go ahead and correct that just a bit. I don't need this trend line anymore, so we'll add our own, right? So I'm sorry, I got rid of that trend line just because of the that was the 1.6 volume day, right? So yeah, let's just go ahead and adjust it ever so slightly here to favor what Sebastian is talking about, right? And at this point, I guess we can. I mean, yeah, screw it. Let's just go ahead and leave the momentum indicator up. So I do have to say that there is absolute confluence with what he's talking about. The regression is testing perfectly all the way back from February 2021 to present day, literally today, with that intraday high of $6.80. In fact, in the after hours, it reached $6.85, marking off a new high of day. Right, so yeah, so I mean, but at this point, the traditional hours are meeting very, very consistent to this. So he was telling me that there could be a pullback here, and I would have to agree. This is likely why we faced a resistance in the first place, right? So let's see if I can actually take a look at the top side here. Okay, it doesn't rhyme quite just yet. All right, so yeah, now we know that this is the possibility, but where would we pull back to? Well, it really depends on sell side interest and you know, buy side sentiment as well, right? So we have to take that into account. So what can we do? Well, let's use our tools. Let's see if we can pull up maybe some moving averages. Let's see if anything is below us, right? We clearly have the SMA 10 located down here at 518. I feel like that's a little bit too low. I mean, anything's possible, right? I did speak about a potential 592 drop on today, actually, from yesterday's video. So that did happen, and so you know, anything is really possible in the markets, right? So why don't we do this? Let's pull up some EMAs instead of the current. Well, you know what? Look, I'll keep the SMA in, the SMA 10 at least, right? And we're going to observe right now the EMA 7 and EMA 9. So let's just go ahead and make them a little bit, you know, more visible. I'm gonna have to enable them. So hold on just a quick sec. I know you don't see them just yet. The reason why is because this is my algo too, right? So you will, if you do gain access to the ARQ indicators, you will also have access to my personal strategies and my personal algorithms, such as this, my ARC, RSI, all of the basic tools as well, right? So here I would just display EMA, so I can see the EMA price action, right? So you can see that the EMAs are actually more or less the same position here as the SMA 10. So unfortunately, I don't think we're going to be able to use that as much. I do, however, have a few ideas though, because of this. So if you can go ahead and focus on the bi-monthly chart, we actually have a bullish crossover in a moving average crossover strategy. So what you're looking at here is the EMA 9 crossing upside of the EMA 21, and it just happened. So this is also a bullish signal that would in essence send price action to the upside. When you get bullish signals like this in a macro time frame, that also kind of introduces the potential of getting some more day trade price action, positive price action into this thing, right? So yeah, so let me go ahead and now actually, you know what, my idea was to revert back to this right here, but that, I mean, honestly, $4.12. Yeah, no. First of all, we have an inflection at 475 that we won't get over, and then there's also this the gap between the bi-monthly candles at 518 or 517, which now is rhyming again. But remember that the inflection point that we were talking about from before was actually located between 558, this point here, which would be better visible through, I think, the 4-hour or the 12-hour, and that was marking off, or let me see if it was a daily, sorry. Oh yeah, so it is the daily, right? So it would be the opening of this candle here, the wick top of this candle here, sharing the top side of this wick, and several other factors, right? So that is very discretionary, tiny tiny little support that I have here, and there could be that touch. Remember which one that was? Yeah, it was the one that we spoke about just last night, 618 to 620 to 621. So that actually starts to feel a little more realistic, right? So one more thing that we want to keep in mind is the fact that we do have one more support touch right back here at this daily candle, and that is consistent of a target of about $6.30. Let's just make sure that we can post it there so that we can all kind of be in the same page when the play comes in and starts moving on Monday, right? So one more thing that we want to do is that let's see. Let's do this. So let's take some geometrics here and see if we can gain some confluence. And that would be using the swing high to the swing low of that bull flag that we noticed from the past iteration, right? So here, let's take that into account. So swing high, this is going to be a Fibonacci retracement, okay? So swing high to the swing low before the run, and that puts us, so the target that we were looking at 621, that puts us at the 611, one spot 618. So now seeing that there's an enormous gap of space here within the geometrics, we can shorten that a bit. And the way we do that is by taking the previous day swing high to swing low, or the range high to range low from yesterday's price action. And if we do that like this, then we start to see some more relevance to the targets that we're looking for, right? So specifically here, we were talking about a target of 630 as a discretionary top side of this wick here. So and that has confluence with the one spot 272 at the 628. And obviously, of course, the tops, the day's high, the previous day high, which was right over here at, let's go ahead and hover that, and the high was 615, and we had a top side, then it was our top side target of 618 to 621. So there is absolutely a lot of rhyming geometrically too. So these are essentially the supports that we can look for, right? So of course anything can happen. The price action can continue to the downside even further, and then we would just face some pressures. Hi, buddy. Sorry, guys, my dog just came in out of nowhere. So So specifically this, right? If we reach the closing of this daily candle, that closing, if you observe right up here, you would see on the C. Let's hover over that, and you see that it says 611, right? So right here is the one spot 618 at 611. So I guess to keep things a little more concise, I guess I can just give you a total range here, and then we'll evaluate it as we go. So 630 to 611 would be the supposed area for getting long here, right? And the focus within this is, of course, this right here, 618 to 621, within the total range, of course. You know how I work. I usually create the range and create a focus area. So that is how we're looking thus far. And to be very honest with you, I do believe that this here, I want to see if it supports it. The bottom side of the Gaussian, there it is. 628 is the retest of the validation here of the top side of the Gaussian band. So 628, and let's come back here and see what we have. Well, what do you know? 630. And specifically the one spot 272 precisely at 628. So I would see that price action would just come back ever so slightly. I mean, Mondays are usually red days, and not only that is that Josh Tsai, right, Stick Vicious himself, he presented something to me that was also very curious, and he said, well, do you think that price action could do specific things, seeing that the next trading day, if you look right down here, look at the date, September 11th, right? So catastrophic day could create some catastrophic price action. There could be mixed feelings. To tell you the honest truth, I have not had the pleasure to backtest this just yet. But if we go to September, particularly September 11th, and see just our last iteration here, what did it do? In fact, September 11th was a Sunday here, so. But I mean, Friday into Monday, naturally bearish, right? Because usually those days they're red, right? So now I guess we can go back here and take a look at this iteration here, and it looks like we had another weekend in the way. But still, look at the price action. It actually fell, right? It came down to the relevant area of support. So that's already arguably, right? We didn't actually have the September 11th in there. So let's just look back one more time, and the previous year on the 2020. So let's go to September 11th then and take a look. Okay, so this is a Friday, and it was a red day. Okay, so take a look at here, right? September 11th. Oh, actually, sorry, that was September 11th right here. It looks like we temporarily pulled back, just like what we're talking about, and then we made the upside. And we're on test number 4, right? We're on test number 4 in the true breakout test here. So, yeah, pullback, recovery, breakout, validation, and continuation. And remember the targets that we were talking about, looking at that specific top side of what was it, 980? Let's go back to the current price action here. So yeah, we just ran a quick little back test here together, just so you can see how sometimes you could, you don't have to run crazy mathematical models. You can just by hand back test what you're seeing here, create a little average in your head, and that'll give you an idea over what's to come. Right, so potential pullback right into this area here. If you're not remembering, 611 to 630 with a focus of 618 to 621, and eventually reaching our top side of 716. We're already very close to that. After market came to after hours trading came to 685. So it's looking very good, and all of those targets are very confluent. So other than the 716, the resistance top based on the substance indicator, which this strategy would also be included into that channel in Discord that I'm creating for the existing and newcomers of the ARQ subscription packages, right? So yeah, Substance is telling us 803 at the resistance top right here, and I do have to give that some credibility because I already had this range as a discretionary resistance. The total range being 789 to 981 with a focus of 883, where our daily volatility versus momentum back test tells us that we're eventually going to go. That is the standard deviation move that we're looking for, right? So specifically, let's see if we have it right. Where did we have it? Let's see. So many charts, so many notes, always taking notes here. You guys know what I'm speaking of, right? This is it right here. Let's go to the daily. And yeah, this is our volatility versus momentum back test throughout the entire trading history, using volatility represented by a BBWP and momentum used represented by stochastic momentum. So this signal is in fact still very much fired. In fact, now the ADX is giving us absolute support. 26% ADX and DMI plus leading the way. This is giving high validity to the upside here for the daily volatility versus momentum backtest, which is leading that the standard deviation move of 35.12% first, right? That target is located at, guess where? 716. We just literally talked about 716 as a resistance. And the next target would be the first, the upper bound of the first standard deviation. So this area here within the bell curve, right? This is the upper bound. This is the 68% of the results, the standard deviation itself, and this is the lower bound. We have an unusable, we have a 1.72% lower bound of the first standard deviation. Of course, we already met that. So the top side of that for, let's see, 68.52% of the first standard deviation upper bound, that is leading to a target consistent of 888. And that's what I was just talking about in the targets back here. So 888 would be one of my tops. I'm sorry, it wasn't this chart. I forgot which one we were talking about on the 88. There we go. This one, the discretionary resistance that I had already drawn with a focus in between at the 50% of returns located at 883. So that is a very comfortable range for me to look at, 880 to around 980 in the potential coming days. If we're observing here money flow, you can actually see in the histogram and stochastic momentum that we're actually increasing the dispersion of returns, incoming cash, inbound cash, and actually moving onwards, right? As you can clearly see here, the EMA3 and the SMA14 are also moving towards that direction, right? So remember, I'm talking about a short-term pullback potential, great opportunity for us to get long the asset and then continue on. But we are definitely talking about the paper trading, right? So we got to make sure to go over here, connect the paper trading, and then we have ourselves ready to get our orders in, right? Simulator trading, we got to train and keep retail safe. Okay, team. So please go ahead and refer to the link in the description below where you will find a TradingView link, and you can get yourself an account there and trade like me, like ARCa. Yay, enough shilling. So yeah, I think that's let's see, I guess do I want to say this? Man, it's already going on 25 minutes. Well, this is a half movie. But yeah, everything here in the RSI is suggesting that potential short-term pullback. We're already at support. And right here on the 6 hour, right? Potential pullback and then continuation to the upside. So nice little long video here for you to be able to split into two or chill or watch the whole thing, whatever it is. But now you know my entire thought process, okay, team? So yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well a very, very good night and weekend, actually. I will catch you at the bell on Monday. Adios. Yeah.